Come along, come along, come along. Let's go. Hello. You're welcome to YRJ Pod with your Joe to Nasser. Hello, Nasser.
I'm doing good, brother. How you doing today?
I'm okay. Why are you calling me brother? Am I your brother?
You are.
Brother in the Lord, yeah?
You are my brother. You're my brother.
All right, how you guys doing today? You're welcome to YRJ Pod. I'm still with your fellow beloved people, Nasser and Joe today. And we're here today again to give you the sauce. Something very awesome today.
Yes.
Something you're going to take away for sure, right?
Always. Real talk, real insights.
Real talk. Every time you come with us, just expect the real talk. No acting, no drama,
No
real,
fluff,
organic, no fluff. Is that what they call it?
No fluff.
What's fluff?
Fluff is just padded things. Things that are just... sometimes, I know in this generation, and like, we get into things where we're just saying things on social media or different places, and it's just all... It sounds very, very high sounding, but there's no real value.
Good.
Exactly, but there's no real value to take from that. And I think we're very intentional in saying, okay, every time we come, we're just going to open things up and make it as clean and transparent for people.
Absolutely.
Especially when it comes to their real estate journey. So
yeah, for sure.
Good to be here. So what do you have on your mind today? What are you thinking?
Before we get into that, please don't forget to like, to share, to subscribe.
Absolutely.
Okay, to this awesome podcast. And then you can also set your alert. I mean, is that what they call it? Alert, right?
Yeah,
alert.
Notification.
Sorry. So that when
I'm thinking of money, but
I love money. Because this is good. I mean, this is come to stay. Okay, we promise you that we want to dish out to you every month one episode.
Every week,
one episode every week, right? Why am I saying one day?
Yeah, every week, every Thursday.
Every Thursday, watch out. So you want to set your notification so you could at least, you get ready because you don't want to miss out any part of it. It's always real, and it's about real estate.
Yeah,
right?
100%.
So you're asking what I was talking about today.
Yes, sir.
So we have to think about it actually. Like, okay, what do you want to give our audience this week? What is happening? What do you think is of value to them? And then we decided to go to share with you what typically happens in an end-to-end transaction. What does it look like? What's that real estate journey? Like we've spoken about how to buy kind of properties. We've spoken about why you need a realtor. But someone is asking, okay, I even want to know what's the end-to-end process like. Let me know what I'm expected to do. I just want to get excited about the process. I heard it's kind of very stressful. Is it really stressful?
I mean, as you know, it's super stressful. And I think I want to stress the fact that it's very good that you brought this up as a topic. Because one of the things that makes the process even stressful in the first place is because there's no... Before we go into that process of trying to buy a house or trying to sell a house or whatever the case might be, there's no knowledge or understanding behind it. Because we as the professionals, and I think I will take the blame for off the buyers and the sellers and to the realtors in this particular instance, is because we as professionals, because we do it on a regular basis, we kind of like underestimate.
Just get very comfortable.
Exactly. So we underestimate the importance of just educating the buyer and educating the seller about what happens and what the next step is from the buyer perspective and from the seller perspective. So yeah, I think this would be a very, very good thing for everyone. So please save this. You might be in the process of buying,
absolutely,
in the process of selling, or you might not even be there yet, but just for future reference. Or you might know someone that needs to understand what happens within a real estate transaction.
Share with them.
From a buyer standpoint and seller standpoint. So please share that with them as well.
Great. So you've heard it all. It is not an episode you don't want to listen to, and you also want to listen again and again. You want to share with someone. Okay.
Yep. So let's get into it.
Yeah. So what does that look like in terms of, so let me start with, as a buyer, what are my obligations in my real estate journey, in this transaction of buying the property, particularly from a first-time home buyer perspective? And I think it's kind of the same. Even for a second-time home buyer, third, fourth, fifth, whatever.
It gets easier, to be fair. Once you've done it the first time, then you kind of like know what to look for.
You get very comfortable. Right. But I always say that no transactions are the same.
Absolutely, true.
Every transaction has their own uniqueness, kind of very different.
Very, very
so
true.
the kind of knowledge or the situation you encountered, in your first transaction might be very different, might not be the same.
Very true.
Again, the property, probably what you bought was a condo, and now you're going to a house. They're kind of very, very different.
That's a very good point.
Yeah. So, even though you might be familiar with, I bought before, but you need to be very mindful that, again, you're dealing with a different buyer.
Right.
Or a different seller. Per adventure. Right. The situation is kind of very different, right? The requirements are very, very different. The market also is very, very different.
True.
and the kind of things around conditions, that you put in different markets are kind of very different. So it's always important to just, this is something you have to keep understanding and keep learning about. And don't ever feel like, I've bought before, I know how it is. No, never say never. Never say never.
Yeah. To your point about it being very different, that's actually very true. So I would say for a buyer, right, what are the buyer obligations? For the buyer, number one thing is knowing where you stand. We've hammered on this over and over again, but we can't hammer on this enough.
We kind of emphasize this,
Number one, knowing where you stand financially, right? Especially for a first-time home buyer, which is getting a pre-approval done. So that's the first obligation you have as a buyer, knowing where you stand financially, knowing what you can afford, right? So you get a number from the bank that says this is how much you can buy, this is how much they are willing to give you as a mortgage in terms of going to buy the property. Number two, like we said already, is having savings, a down payment somewhere. So you have that ready to go as well. And the third thing is your credit report / credit score, knowing where that stands as well. So because that will determine what the interest rate the bank gives you.
It gives to you, yeah.
Step one. Once you have that figured out, the next thing you need to do, and you get that done with a mortgage agent, by the way, right? A mortgage agent / broker. The next thing you need to do is then engage a real estate agent. That's myself or Joe. Once you
don't want to engage anyone else, because the kind of service you're going to get, trust me, for real, it's world class.
Premium service. So next thing you do is engage an agent. And then that's where the second step starts, which is the search for the right property.
Okay.
Right? Search for the right property. Based on your family dynamics or what your needs are in terms of location.
Before we get into the search, are there documents I have to sign?
That's
or
very,
I don't
very
have to sign any document. We could just eat the road.
Good catch. So see, this is why I spoke about how we do this in a regular basis, so we forget that
exactly.
Part. So yeah, there are definitely documents you need to sign. Working with the real estate agents, there's the RICO
guide,
information guide, which basically outlines your responsibility as a buyer and the agent's responsibility towards you. So you have to sign that yourself and the agent that is representing you, right? You sign that document. Then there's also what we call a buyer representation agreement.
Okay, what does that mean?
So basically, it gives us as agents the right to represent you.
Okay.
Remember, the word agent is very, very key because an agent is basically someone that's in between two parties, right? So we as the buyer's agents, that gives you basically saying, NASA, Joe, you can represent us in terms of this transaction, right? Usually that agency period can be for 3 to 6 months, usually. If it's past 6 months, then there's an initial that you need to give your agent to represent you longer than 6 months. This is what the law says for us as agents, right? So you sign that as well. And then the third thing is also a document that is called confirmation of cooperation and representation, which just means as agents, we can get paid for representing you. So I think those are 3 key documents. There are other documents.
I think somebody will feel like, I can do this myself. I know this document. That's why I already said the document already. I can go ahead and do it myself.
There are other documents as well. But I'm just stating the key. There's a lot of paperwork behind the scenes.
Yeah.
We don't need to bore you guys with all those details, but these are the 3 key ones to watch out for in terms of knowing what documents you'll be signing. Because if your agent sends you that document, don't be afraid. But obviously, if you can feel free to get a second opinion from maybe someone that has gone through the transaction already, or reach out to us. We have our email in the description as well. So yeah.
And someone could be like, why do I need all this? I'm just buying the property. I'm buying a house, right? I mean, probably from wherever they're coming from, it's kind of very different, right? Any particular reason why the Canadian government is very critical around ensuring, that all those procedures, documentation have been signed before you get into the transaction?
That's a very good question. So people have been buying and selling real estate, I'm assuming, for years in Canada, right? And over time, they've probably seen it all. They've seen all sorts of situations, right? So the documentation is just basically to say, for instance, you don't want to just rely on word of mouth to say, I just told Joe, I want to buy a property.
Absolutely.
So he puts in an offer for you. He puts in an amount for you that you never agreed to. And he goes, and basically he puts you in a binding contract. That I don't think that will be fair to anybody. That doesn't even make any sense, right? So the government has put in place, and the real estate organizations that manage us as realtors, and that's the RICO, Real Estate Council of Ontario, and each province, just to be clear, each province has a different body that manages that. So Real Estate Council of Ontario, we have the Ontario Real Estate Association, and then we have the brokerage that we even operate under as well, right?
And there's the TREB, the Toronto Real Estate,
Toronto Regional Real Estate Board as well,
which is because we controls a larger part of
the greater Toronto area. Exactly. So there's that. So basically, it's just to put a form of standardization in place And so there's proper representation, and just to prevent conflict, really. I mean, anything that's written on paper just helps to prevent conflict.
It creates a very
just gives clarity to whatever transaction or situation someone might be in. So yeah, I believe that's the case for it. I'm not sure if you think there are other reasons as well.
No. I mean, you know, for a fact, I always tell people that I feel that they, again, maybe probably because it's just kind of like it's a pride for me.
Right.
I feel like the real estate business seems to be like one of the most regulated. Of course, other professions are also regulated,
financial services,
but you kind of feel like there's just a lot, because we also, for example, we also have to keep abreast of the financial side of it with our FinTrack.
Yes.
Right. So I don't think financial need to get to know about so much about real estate. So you can see that we kind of touch, because it's about money.
Yes.
And it's not small money.
A lot of money. Large sums of money are changing. I mean, deposits, when you're putting an offer, which was the next step, really. When you are putting an offer on a property, meaning you're saying you love this property once you started the search period now, and you find a property that you like, right? Once you're putting in that offer, you put what we call an earnest money deposit, which is just a sign of good faith to say, okay, I like this property. I'm not paying you the entire amount now, but in the meantime, I will give you, maybe, depending on the purchase price of the property, I'm giving you 5,000, 10,000, or 25,000. These are huge sums of money.
Yeah.
So you need documentation to be able to account for that money and where that money is going to. Usually it goes into the brokerage account of the other agent. So the money is not going into our bank accounts as agents. In fact, if someone tells you that, that's wrong. It goes into the brokerage account for the seller's agent, right? And so, yeah, that's the next step. So you put an offer on a property. Now, the offer process in itself, it's not as straightforward as we are saying it, because there could be a bunch of back and forth. For instance, I'm representing the buyer. Joe is representing the seller. Joe wants to sell the property, or the seller wants to sell the property for 500,000, but I'm willing to offer, because it's a negotiation, right?
Yeah.
And I give you an offer for 450. So there's the potential of a little back and forth, and also there's the potential of there being like more than one buyer that's interested in that property. So I might be competing with a different buyer as well, and that's what we hear the things about multiple offer situations or biddings, right? And then so someone's offering 460, I'm offering 450. Another person might be offering the 500 that they want,
even more
or more.
Yeah.
And so as the seller, he's thinking, I just want the highest amount. So, and then he might come back to me to say, Nasser, thank you for your offer and everything, but this person is giving us what we want. They will never disclose the figure, except the seller tells them to. But they'll just tell you, okay, this is what this person has, a more competitive offer. This language we use, right? And it's up to us to see if we can do better, if we want to match that amount or even do more. And whoever meets all of the seller's conditions at the end of the day gets the property. And
in some circumstance, right, the condition also, could help the seller,
right,
in deciding, right.
Yes.
So, for example,
like what kind of conditions?
So, for example, I could make an offer of, let's say, property is listed for 500,
right.
I could make an offer of 480, and my condition is I want to go firm.
What does going firm mean?
Means I'm saying this is binding and binding. There's no condition attached to this. Right. So the buyer is tying himself down right away to say that
I'm going to close
I'm going to close this lease, for 500. Right. And someone is coming with, no, let me flip it the other way around. So the house could be listed for 500. And I'm saying I want to go 480.
Right.
No condition. I'm saying, don't worry. I don't want to inspect. I don't want to, things like inspection. Things like approval from the bank to get mortgage, before I close, to confirm the bank is willing to give the funds, or just quite things like that. But so I could say, at 480, I'm going firm, saying that I'll figure it out. We are definitely going to close on whatever date we've agreed. So I'm saying I'm not doing an inspection. I'm taking the house in good faith, believing that everything as it is what it is. Now, at 480.
But I can come in at 500.
You could come in at 500.
Giving them the amount that they actually want.
Yeah, and then putting a lot of conditions.
Yes.
Right?
And you say no.
So typically you say that, the buyer shouldn't really bother. 500 is what you're looking for. Take 500. No, but for the buyer.
For the seller, you mean?
For the seller, because they want to sell, they might feel that 20K, right, is not worth the whole stress of having to be on a condition.
Yeah, because on a condition I can still back out.
I can back out.
Right.
And they really want to sell. Right? Because they've bought the property already and they need to close.
That's a very good point.
And they want a good commitment. They don't want and it's not like probably they feel something is wrong with the house. They just don't want any
back and
any
forth.
back and forth.
Yeah. Yes.
Right? To say maybe you're going to come and, because at that point, the implication is that you can see you're not buying anymore because of this condition. And what if you don't get approved for the mortgage?
Right.
Right? And the seller has probably lost a lot of other prospective buyers and they have to go back all over again.
To start the whole process.
So they're like, kind of like, I don't want to go through all of that, right? So
it's not always about money.
It's always about money.
Yeah.
It's always about a whole lot of things for the buyers. Why are they selling? Sometimes it's also always a condition, right? Why am I selling? Which is where on the other side for the seller, we always ask the question to know how to package, to know how to present the information. Why are you selling? We determine the kind of, doesn't mean that, we won't still represent them well, but just helps with the whole visibility, understand, just to get the full story of the scope and be able to give them the best advice in terms of their sale, right? So yeah, just wanted to mention that, that's, like I said, it's not kind of like very straightforward. There's a whole lot of
back and forth.
So we have to do inspection. We have to wait for like 3, 4, 5 days to get the mortgage approval. And the American say, "Oh, sorry, we're not approving. We need more time."
True.
And then the buyer is kind of like frustrated because again, there's a lot of, we spoke about emotions.
Right.
So for the buyer, they're very emotional. For the seller as well, they're very emotional, anxious. They want to sell. They want to just get through and move on. So it's always kind of like, it's a very interesting journey, to be honest. I mean, for us, it's interesting. It's a lot of work. Right. It's a lot of calls, following up.
And deals anything can happen in the space of 3 to 5 days.
I tell you.
That's the funny thing about a transaction. Like anything can happen. For instance, let's say let's assume it was a condo now, that someone was trying to buy a condo, right? We spoke about conditions. Okay. The bank approves it. The inspection comes out great. But then the status certificate.
So what does that mean?
So status certificate is something that it's a document that the seller provides, depending on what you agree, but usually the seller provides to say they're in good standing with their condo fees. Because, every month if you own a condominium, either a low-rise or a high-rise condominium, you're paying like monthly condo fees and stuff like that. So that status certificate is one thing, and that shows, okay, this seller is in good standing. They've not missed any payment. They're not in default. Number two, they haven't added maybe something to the property that the condominium board did not approve, right? So that's a key document. So imagine if something comes back on that document and it kind of like picks the interest of the buyer that, oh, why do I have to, for instance, the condo board might be like, oh, after a reserve study, we feel like the condo fees are going from 400 to like 700.
And that happens a lot. In some instances,
it could happen. So you as a buyer are thinking, "Oh, my budget didn't plan for 700," and then you back out of the deal, right? So those are those conditions that can kind of like save you. So we put a clause in that says, "Oh, this offer is conditional upon everything being clear on the status certificate, and the buyer has the right to opt out, and they have the right to collect their deposit, that 25K that I spoke about, back in full."
So let me share a very good example of a rental property that I just leased.
Nice.
Two, funny enough.
Bro, share this money now.
We didn't share now. So one, we made an offer, went to inspect the house. The seller was not, the buyer was not even here.
Right.
It was based on trust. We got on a video call.
Nice.
And that happens a lot, right? Which is where the trust comes in, when you really know what your client really wants.
Yep.
And your client trusts to know that you have an idea of what I want. And you're not just trying to just get me something, right? And even for us, we even go over and above in terms of what you want, right? And that happened in the other scenario I'm going to share, right? So we went in, did inspection, did everything was good, and made an offer. The buyer was already excited. The tenant was already excited in the circumstance, right? And then made an offer, and then I got a call to say, "Oh, sorry, the landlord is not listening anymore. They have some medical issues," then
I hope
what kind of we should talk about the emotion. They're already excited about it. Just believing everything was good. But this is the beautiful part of it, which is why for us, all believers, as we believe that all things always work together for the good of it.
Yep.
What we saw was good. But the second one we saw
was even better?
Wasn't better, was best.
Wow.
In that circumstance, right? Eyebrow area, pretty very cool. Proximity to work for the clients was pretty exciting.
Nice.
But the point I'm trying to get at is the kind of conditions. You'd be amazed at the kind of conditions you will see on properties. Either you're buying, but most times. So one of the conditions in this case was the seller did say that, the tenant, which is always called the seller, did say that you're not going to attach any fixtures to the house, right? So the question, are you saying I will not mount curtain? Are you saying I will not, because it's a brand new house.
Right.
So the landlord is really very concerned because they spent a lot of money.
They don't want you putting like massive paintings.
I mean, they don't want because I mean, they just like what they've done, so they don't want any modification of any sort. And again, we can understand because sometimes when people rent a house, when they're leaving the property, I mean, some people are not just very nice.
You can leave it like
they just mess things up, and you're kind of like, how much did I even make? Right. And I'm gonna spend this so much to fix up.
But hey, I mean, from a tenant perspective, they're probably thinking, well, I'm paying you, so. I mean, I'm not saying it's right, but they're just thinking to themselves, I mean, we're paying for this, so we have to use the space the way we feel comfortable in the space as well. But
which is fair.
But there should be a limit to that.
Which is fair, right? Yeah. But there has to be a limit. Yeah. Because again, think about it. If the house was not in a good condition, you wouldn't have liked it.
Absolutely. That's a good point. Yeah.
Right?
Absolutely.
So why do you want to do that, for the next person, right? True. So which is why we start with that. Let's always put ourselves in people's shoes and do things as best as possible.
And as a tenant today, you'll be a homeowner one day.
You're going to be a homeowner, so you don't want to go through,
right?
Yeah, exactly. And you don't want to go through that pain of, having, which is why I find that for rental, there's a lot of scrutiny that goes into it because, people have had their fingers burned as landlords.
Okay, so let's go back to the buyer so we don't forget.
Yeah. So in that situation, the condition was put in that situation, and quite a lot of other conditions. But the one that really interests me the most in the condition was the fact that you're not allowed to bring in visitors.
Anyways, are we talking about? But to be clear, when you're buying a property, all this doesn't matter.
Doesn't happen. So I'm just trying to tell you that. Like in the clauses, right? Which is why it's very important that we have to read through the clauses, because sometimes you could get overly excited,
right? And
just assume that, you know what, it's all good.
But that's why you have agents like.
Which is why you have agents.
Exactly. You know what I thought of the other day? I thought of this, right? I was thinking that in this very, very interesting thing, I mean, you had this conversation. In this whole layoff season, right, where people are getting fired, they are getting sacked or whatever term you want to use, right? Wouldn't it be interesting if we are putting a clause as agents that says that I'm actually because, hey, whatever you put in the clause stands, right?
Yeah.
I'm thinking like to protect your buyer. I haven't tried this before, guys. I'm just throwing things out there. I'm just thinking, how about if I put a clause in the agreement? We put a clause in the agreement that says, although we are going firm, this offer is conditional on the fact that conditional on the fact that the buyer does not lose their job before closing.
Right?
Do you get it? I was just thinking about that again.
Are you wishing me bad? Why are you putting that kind of clause in my contract?
I'm saying. I mean, I know the seller might not agree to that, guys. I'm just saying. But I was just thinking to myself, because if you put it in the contract, and let's say after you go firm,
something goes wrong,
then technically as a buyer you can back out of that deal. I was just thinking.
Wow,
what do you think about that?
Honestly, it sounds very interesting.
Because in this season where people are not sure, right? They're trying to buy a house and they come to you and say, "Oh, I'm so sorry, we had to."
But again, the question would be, again, I'm trying to think like a buyer who probably doesn't want to go ahead anymore,
right?
And want to use that caveat.
Yeah.
To get out.
Technically, the offer is not firm because it's still a condition.
Yeah.
So it's not even firm.
So that means I can just come and tell you that, sorry, I lost my job. So are you required to ask me for any evidence?
Okay, so we might need to give proof. Maybe we can add that to the clause. Guys, we're just sorry, this is a real talk. We're just trying to
bounce ideas around.
Bounce ideas
so I have to provide an evidence to say, I've lost my job.
Yes.
How do you validate the evidence? In this day now of ChatGPT,
that'll be difficult.
Designing things for you.
People can do and undo all sorts of things.
I mean, trust me.
Yeah, okay, true. So,
but I think it's a good thought.
We will not be accepting that offer.
But I think it's a good.
If you're a seller,
it kind of sounds pretty very good.
Yeah.
Right. But as long as we can build a framework around it to validate and invalidate to be sure that really, really, that really happened.
You want to look into that, yeah? Because I'm just because one of my fears for buyers really. You know why I'm saying this? I've been in a situation where we're representing this. In fact, in this instance, we're representing the seller, right? But so the seller was selling their property, and then someone was supposed to buy it. They had the buyer already buying their own property, so they had to move out by a certain date. But the family was also trying to, they were selling because they're trying to buy a new construction property that they had put a deposit on like years before, right? And you won't believe that in the middle of that process, my seller/buyer client got fired.
Wow.
Yeah. So he's thinking, and so he's freaking out like, well, what am I going to put my family? I have to leave this house that I'm in because I already sold my current house. But now, even to close the next house, I just lost my job. Luckily for him, I don't know what stops he pulled or whatever. He found a job before.
Wow, good.
But it just got me thinking that's a very dicey situation to be in. So I was just trying to just bounce ideas. Just think, okay, what can we do to prevent that kind of situation? I mean, you guys tell us in the comments. Maybe,
what do you think? What do you think? And I think for me, it's kind of even more. It's kind of more doable for a pre-construction.
True. Why?
Right?
But why do you say so?
Because I mean, okay, so for example, for a resale, it's a very short time, right? To worst case 3 months,
3 months
to
to
close, right?
I see.
So the probability, I mean, again, this can happen overnight,
right?
But from if you talk about the probability of that happening, it's kind of slimmer. But for a pre-con, probability is really higher, right? It might not even be layoff.
Longer timeline.
It could even be a life circumstance,
right?
Probably something is going on, and something has changed. Somebody had to get out of job, or probably family attention, or whatever the case may be, right? Yeah. You know, because that you're probably looking at like 3 years, or 2 years for you to close. So within that, I mean,
anything can happen.
Yeah,
really.
there's probably even natural occurrence. There's a whole lot, that can happen in that situation. Yeah.
Okay.
So I think that kind of clause really, that kind of protects both
people. Yeah.
Yeah, in that kind of a case. But I think more it protect the buyer, because now, I mean, you don't have a job anymore, right? For the pre-con you were intended to buy. And then, how am I going to close? Of course, I don't have.
But with the pre-con, remember, the builder is the one that even drafts the contracts anyway.
Yeah.
So you can't even add.
You can't add. You can't
really.
modify.
You have to go with the builder's
No,
contract.
you know what? Don't speed that. We're going to get into pre-construction, because we really have a lot of very interesting and the things you've been itching for.
There's
right?
a lot
to
of
talk
different
about.
things. Okay.
So back to the transaction walkthroughs, right? So you've gone, signed out the documentations. Then what's the next thing? You go showing, looking at properties.
You fall in love with the property. You can envision your family in the property. So you place an offer. God willing, you win the bid. And so now you have 3 to 5 days, if the offer is conditional, to basically let the seller know that, hey, I spoke with my bank. We're good. They're willing to fund this deal. You check the title of the property. This is where you engage a real estate lawyer. Usually, you have to have a lawyer already, like, just on standby. So when the offer does get accepted, they can just quickly run and get things done. So you have the lawyer on standby to check maybe if a starter certificate needs to be checked or verified. You have the lawyer as well. So that is approved as well. Next thing, what else? Inspection. You get the home inspection, right?
So you get that wave to say it's done or fulfilled, as the case may be.
If you are good with what you see in the home inspection reports, let's say the furnace is this many years old, the AC is this many years old, the hot water tank, just things like that, right? If those things are in good condition, you just say, okay, fine, like, we can wait. We're okay to go firm, meaning we are bound to close this deal. If it's not, sometimes you can go back. Usually you go back to the seller to say, this air conditioner, let's say you pay $450, right? And you're thinking, okay, this air conditioner is like 15 years old already. Hot water tank is like 17 years old. Usually they are reaching their lifespan at that point in time. So you might want to just factor that in to the price that you're paying. Then instead of paying $450, should I possibly be paying maybe $440 instead of $450, just to create that buffer for yourself, right? Because you'll be paying lower down payments if that's the case. So yeah, if everything is clear and everything is clean, then you just go firm. At that point in time, your lawyer is the one that is doing the heavy lifting from that moment moving forward, right? As agents, we're just here to basically just check in on things, make sure both the mortgage agents, the lawyer, everyone is doing their job. To ensure that things go wrong, because sometimes between when you agree and the closing day, which is the day that both you and the seller agree to close on, anything can happen.
Anything can happen.
In fact, a lot of things can happen between that time period. So we just need to be checking in potentially weekly, bi-weekly, whatever works, to ensure that things are going
as planned.
As planned, right, until the closing day. On the closing day, funny enough, on the closing day, I feel, aside from the start of the transaction.
Who's excited about closing day?
Yeah, so closing day.
Like, it's always exciting.
You're ready to pick up your keys.
I tell you, man.
But funny enough, on that day, a lot of things can happen even on closing day as well.
The mortgage might not, the bank could delay, they might not approve.
Now, let's give them let me give them one trade secret. Guys, you'd appreciate us for this, right?
How much are they going to pay for that?
Let's get them for free. They watch the video to the end, so we'll give them for free, right? We personally do not like closing on a potential long weekend.
Yeah.
Right? Or even on a Friday.
On the Friday.
Because let's assume there's a long weekend on Monday. It means that if anything happens on Friday and you cannot close, no one is open on Monday, and let's say you've already given your landlord notice if you're a renter that you're moving out on Friday, where will you sleep between Friday? Because Monday there's nothing happening on Monday, banks are not open, lawyers are not working on Monday. What happens on that day?
I think I had this situation. If you remember, I mean, you were the agent I represented.
Yes.
Me at that time on our former property.
Yes.
Right, and we had that issue. We're supposed to close. I think it wasn't even a weekend. It was just an example.
Right.
The buyer couldn't close on the closing date.
Right.
So they requested for
extension. Yes.
Guess what? It was a lot of money.
Yeah.
They had to pay. Like, we're just living. It was like I was living my house for free. I was living rent free on their head.
Yeah.
Because utilities were paid by them.
Yeah.
For the whole extension
the lawyer
period.
will have to balance.
Yeah.
Do checks and balances.
Even the cost of feeding.
Yes.
But we were nice enough.
Yeah. We didn't push them.
We didn't push too much.
To be clear, I was his agent representing him before he got into the business.
Yeah.
Yeah.
Okay. Thank you for saying that. He's my big brother, anyways. Leave it like that. So, but the reality is, I mean, we're not asking you. We're just trying to say what you have a right to do.
Yeah.
Because it's like a contract, right? And then you're defaulting, right? So it's going to cost me something.
Yes.
As a seller.
Because you made your plans.
I made my plan.
Imagine if you already paid the moving company to come on this
to move out.
They're going to charge you as well.
Yeah.
So
sometimes even people even move into an hotel.
Yes.
You know, probably because they have a new house they're also moving into as well. And look at how it kind of trickles. Right? The other property, probably they've bought the property as well.
Yes.
They expect them to close on that date.
Yes.
The buyer, the other seller...
That's if you're going to buy another property.
The other seller will tell you that, we're expecting you to close.
And they might charge you as well.
And they'll charge you for the utility, even for some might be very mean. They feed in for that period of time.
Some people are not...
Because it's an inconvenience on them.
It is.
Right? Probably they'll tell you, we've lodged in an hotel and we intend to check out on this day. But now we can't again because you've extended. Right? So that means you have to cover. So it's and it's legal. You're doing the right thing. But again, I didn't do that.
Right.
Because, I mean, just felt like, you know what?
That's a big deal.
Things happen. Like, anybody can get caught up in such a line. I mean, it wasn't like they intended it to be like that.
Yes.
So back to what you're saying.
Just don't close on it. Just give yourself or ask your agent to just give you a buffer, right?
Yeah.
Like, if there's a long weekend coming.
Just in case anything.
Don't close on the Friday. Close like on a Wednesday. Even they might be inconvenient for some people. I get why people don't want to close in the middle of the week because of work and stuff like that.
So weekend they have enough time to move, to settle,
exactly. But just to save yourself the headache sometimes, just give yourself that buffer and just close like on a Wednesday. So closing day is ultra key.
And I think most of the time I tell people that sort things out, like don't even wait till the closing day.
True.
Right? Whatever you need to do with your lawyer, get it done.
Get it done like a week ahead
the mortgage
of time.
commitment, like because people get sorted out, even though close on a Friday.
Right.
By Wednesday, everything is
done.
done. They're just waiting for the bank to advance the fund, and that's it. Like
Yep.
on their own part, they are all done. Bank has confirmed that we are good, signed commitment. Friday, we're good to go. And with that, nothing really, I mean, if it's on the bank, nothing will really go wrong. It's just between the bank and the lawyer.
And the lawyer,
just advance the fund.
At this key point, the mortgage agents and the lawyer are working in tangents to ensure that things close when they are supposed to close. So we as agents are always just keeping in communication to them just to make sure by Monday we're calling. How's everything looking on 123 Apple Street? Are we good to close?
Yeah.
What needs to be done, right? You as the buyer, it's important for us to mention this as well. This is where you now give the final balance of the down payments. If you're putting down 5% or if you're putting down 20% or whatever. So you need to get that draft ready as well. Please bring out. This is something that we should have touched on initially, and I'll take us back a little bit, right? If you know you are trying to buy a property, because I've seen this happen a number of times, you're trying to buy a property. Make sure that the down payment that you're going to put down, that's your portion. So let's say the house is worth 500, the bank is giving you 450 as a mortgage. So you have to bring 50,000 in cash.
Yeah.
That 50,000 needs to be in a Canadian bank account at least for 90 days.
From a FinTrack requirement, right?
For 90 days.
Is that FinTrack?
So this is actually the banks. The banks just I believe it's I'm not a mortgage agent, but based on my experience in this, the banks want to make sure that it's not like there's no money
laundering
going on and stuff like that, right? So it's just to say if you know you have intentions, because people have money like outside the country. You have like Bola, you have money in Bermuda or you have money in a Cayman Islands.
That's it. The money is there. And I think the real reason for that on the bank side, if you look at it, is because like if you're buying a property,
right,
they expect that from your home, from a financial perspective, should be coming comfortable for you.
Right.
And you should have a big contribution you're making from it.
Yeah, you have skin in the game.
Yeah. And they want to be sure that the money is actually yours, because a lot of things goes when people borrow money, people do stuff. So they really want, like you say, what's trying to say is the fact that they want to request that money to be there for at least 90 days because they want to be sure where the money is coming from. If they need to do any investigation to trace the money within that period of time.
Right.
They can trace and be sure that okay, the money is actually your money. And it's not like from any probably borrowed funds or money laundry or into any kind of crimes or whatever.
Yes. And that's not to say sometimes they might, it depends on the bank. Some banks might be lenient. They might just ask for like a paper trail. Let's say, for instance, you had that money from your home country of China or your home country of Ghana. As long as you can show like a bank statement from there, here they might be lenient, right? But just to prevent too many questions, just make sure you have that money in a Canadian account. I would advise clients even before you even start thinking, as long as you're thinking of buying, you already start making offers, just bring that money over to a Canadian bank account. Just have that money seated there. So I'm saying that because on closing, for instance, if you bring let's say you put 10,000 when you put in the offer, so now you have to put down the rest of the 40,000, and you just bring the money from somewhere or cash. They're like, okay, where did this money? They might be asking you where did this money come from, right? And you're not able to close just because you didn't follow due process, right? But yeah, speak to your mortgage agent, speak to your mortgage broker on this, just to make sure you're not bending any rules.
And on the broker side, right? On the broker side, so which is better for me? Because I know there are different kind of brokers. There are the independent brokers. There's also the brokers that work with the bank. So which do you think, for someone might be a better option?
The $1 million question.
Yeah.
So broker, we're talking about mortgage brokers, not real estate brokers now. Okay, so to be honest, it's whoever gives you the best deal. I personally don't have any allegiance to either.
I have allegiance. I have allegiance.
I know. For me, I'm just thinking for my clients, who is giving you the best deal, right? Who's giving the best deal? We have the big 5 banks. If you go to them, let's say you bank with any one of them, who is giving you the best deal? But people usually say, but this is within the real estate. I know that's what Joe is probably going to talk about going to like a mortgage broker, because they have access to like a lot more financial institutions, right? Because if you can't close with it's a different conversation, but you can't close with a lender, which is the top 5 banks.
Yeah.
Then maybe someone who is like a B lender, has other financial institutions that focus just on mortgages, may be able to fund your deal, right? So you have more options. So I just feel whoever gives you the best deal, you should go with. What do you think?
I think for me, it's the independent broker. And the reason is because they are more flexible.
True.
They can always get you rebates. They can always get you because for them,
my A lender gave me rebates when I was buying my property as well.
Well, good. I mean, I'm not saying they're not good.
Right.
For example, the reason why I choose them is because they're working with different. Like for them, they want to close.
Yes.
For them, that's how they make.
Because they're also on commission.
That's how they make their money.
True.
Right. So at all costs, they want to find every possible way.
Right.
To ensure that this deal, closes. Right. So you get more. They are more enthusiastic about it. They're more passionate. They really want to get things done for you. Doesn't mean the bank brokers won't get, but it's just kind of like, think about it, like they're salary earners, right? So they're kind of like doing their job, right? As against someone that this deal is how I'm going to get my money.
I have an argument against that though.
Before you give me your argument, let me finish.
Okay, finish.
And I think again, it does have its pros and cons.
Yeah. Now
the cons for me is because they are not working with the bank directly. Even when there are issues, right? They might not be able to, find a way to make cases for you, justify.
You took it out of my mouth.
Oh, that's what you're going to say, right? Okay, great. So that's kind of different.
Because if you're salary with a bank, right? Even if something is not checking out, I find that agents that work within the bank can just go to their boss and say, hey, boss,
let's get this deal. They can be able to wrap them.
Let's finish.
Yeah.
As opposed to a broker who is an external party, they're trying to reach into the organization.
Exchange mails, sending mails, and everything is done by emails.
Exactly.
Right? Because they don't work with the bank. So they have to probably keep exchanging mails and then getting a response. And between that, you are working with time.
Right.
So yeah.
And also the second thing is you also have to make sure that because I had my brief stint as a mortgage agent as well, right? And then I saw
I mean, you've done so many things.
I know, to the glory of God. So I saw this where another con with the mortgage agents is that the mortgage agents, because I'll put it this way, banks have a very rigorous training.
Yeah.
For anyone working at the big 5 bank, there's a training that they go through, right? Because they're selling, it's easy for them because they're selling just 1 or 2 products.
Yeah.
So it's because a mortgage is a product at the end of the day. So they can just train their agents on, these are the products that we have, and this is the client that fits this product, right? On the other side, mortgage agents that are independent, they work under a brokerage, but they have liberty to do what they want to. They can go to any institution. So sometimes you may find that they haven't been doing that for a long time. And so they might not have the technical
They're not in tune with
in tune with what's going on and things like. So that's just again, some might have been an agent for like a mortgage independent agent for like years, and they've seen it and done it all, so they're fine, right? I'm just saying that banks have a very rigorous training. So yeah.
So I think at the end of the day, like I said, I mean, just look at which you feel offers you the best service.
Yeah.
And then make the right call.
I think we should elaborate on what the best service looks like with the mortgage agents.
Yeah.
I would say there are things you're looking at. Buyers are always focused on the rate.
The rate alone.
But it goes outside of the rate that you're getting. So it goes to the rates that you're getting. Number one, is still important. The rate that you're getting. Number two, what are the prepayment privileges
that you get?
For instance, and that simply means you have a mortgage of 450, right? 450,000, and you've been paying your mortgage every month. Some banks let you put a lump sum
in percentage, just say maybe like 10%, 20%
within a year to pay down the amount you're owing, right? So that way you pay off your mortgage faster. Not everyone does that, right? Also, in terms of what else can be a good thing to look at in terms of the break. If you need to break that mortgage,
the calculation, what are the penalties you have to pay
that are involved? People don't think about this because most people. Funny enough, there's a statistic that says most people that buy a house, first-time home buyers on a 5-year term, always break in year 3. Not everyone stays the whole 5 years.
Yeah.
In fact, most people don't stay the whole 5 years because
a lot of things just go
circumstances change. Yeah. They have more income now. They want to
get something bigger.
Into a detached property from a townhouse and things like that. So just think of the other things. Don't be overly rate focused, even though rates are important. Just think about other things as well and get a mortgage agent that can basically advise you on that.
And I think this is why you need to work with the YRJ guys, right? Sir. Because I mean, beyond just finding your property, we're very detailed, right? We look through all of those things. Though we are not mortgage brokers, right, but we have an understanding of it, right?
Yes,
so we can actually just look at the documentations for you,
right,
advise, and then you can get a second advice from your broker. But we just try to make sure that it's from the options that you have. We can give some guidance as to the best of alternatives that you could pursue. So which is why, I mean, we don't just stop at offering just buying a loan.
It's full service.
Like I've always said from the very first start.
Yeah.
We always create a personalized approach because no two clients are the same.
Nope.
Right? Yeah. And no two properties are the same. So we look at your situation, look at, what you're getting and be able to model for you, create for you what we think. It's like a package.
Yes.
Right? We create for you your package and then it's much easier for us to run with that.
Absolutely. So, God willing, everything goes as planned.
Closing dates are very exciting days.
Closing day, and then I know, people are. It's so funny. And that's like one of the beauties of what we do. I mean, you talk about this a lot. The beauty about what we do, right, is that sometimes I've seen buyers just waiting outside the house. They're just waiting for people to just say, because it's kind of like it's almost like a stamp on all of your hard work. You work. I mean, everybody, most people, 99% of people just work hard.
But guess what? Something I remember, but that we didn't mention. Sorry to cut you there.
No, not at all.
Before the closing, you could actually have another inspection of the property.
Oh yes, we'll do it like a pre. So all the things that clauses that we put in, right? Yeah. Just basically make sure everything's okay.
Yeah, and then there could be surprises.
Because sometimes sellers are not always as we spoke about tenants leaving properties in a weird way.
Yeah,
a seller can also leave their property in a weird way for you.
Yeah, and there's surprises. For example, maybe when you were doing your showing the offer, the washroom was in good condition.
And you come back,
right? And you come back. maybe one of the faucet is broken or something has been removed. And sometimes people put things in the house just to stage. Right? And if it's not, and again, if it's not clear, maybe it's a chattel or the fixtures, right?
What are those? I think we need to elaborate on what that is.
Okay, so chattels are things that are movable. Just make it as simple as that. Right. There are things that can be separated from the house without any, modification being done to the house.
The couches, the
chairs,
stuff like that,
the pictures, the wall frames. While fixtures are things that are attached to the building. They are not movable. So things like
if someone takes your garage door, you have a problem.
Things like the bathtub.
Someone goes that is a problem.
Things like, for example, things like chandelier could actually be a fixture and a chattel.
Right.
Except it's written in expressly written. Yeah,
because people get some very nice fixtures.
Feature that can easily just one hand removed and there's no damage done.
Right.
And probably when you went for your home inspection, you probably what caught your attention.
Yeah.
So it's always very good, which is where the conditions are being looked at, what is being sold with the property.
Yes.
And so even some people even remove water tank.
Are you serious? Oh
yeah.
my gosh.
Yeah.
That's petty.
You know, probably because
if it's a Navian, it's like the new ones, like those ones that are mounted on the wall.
Yeah, so the very small ones,
Yes.
what do we even call them?
They call it
tankless, right?
Systems, yeah.
And then you see them bring in a tank. At least all that matters is that there's water heater, right?
You have hot water, it's fine.
You know,
Yeah.
so all this kind of a thing, right? So, which is why the inspection is very important.
Yeah.
You need to capture things you saw when you went for which is why your listing documents, you need to have them. And so, like us, we create like a magazine, you know, for a house we're listing. So if you want to list, you don't want to look further. Right?
Absolutely.
We give you the best image of your property. You know, I mean, what people can take away, you know, like a file. Even for you can keep looking like a memory, right? To tell your children that we lived in this kind of house. Look at how it looks, right? So things like that. So when you have those documents, you're going back for your final viewing before the closing date. And then you can check in terms of what you saw, what was listed, what was advertised as fixtures and chattels, and be sure that nothing is left. Because again, things can be left that should be taken away. That's going to probably on the backyard. They have this very massive drum or tank or cupboard.
Just random things.
I remember on our property there was a very big storage room.
Oh, like a shed.
Like a shed that we don't need it.
Okay. So you asked them to take it?
Yeah, because it was going to be a lot of trouble.
Right.
So just very good, you know, to look at those things. Because again, for some I feel like, this thing is good, but for you, it might not be good for you. You don't want it. It might be a lot of work for you.
Or you have other plans for your
You have other plans for your backyard, right? And you're like,
no,
please. So it's good that in the agreement, it's there and you're checking that.
Please take this.
Take it away. I think in some instances, even the grass, you know, the weed at the back can be so heavy. You know,
especially if it's in a time where like maybe they were selling during summer, they went on vacation, and then by the time you're closing, the grass is like 4 feet high.
Yeah, so you might need to put that in your condition to say that
take care of that.
Have to be taken. Don't just leave it, you know, just leave it ambiguous. Say that it will be clean. Clean is very relative. You probably have to specify that, or the grass should be cut to level, and then you might have to agree on it because it might be like. Yeah, and it's up to you if you feel like
if you don't care about it.
If you don't care about it,
lawn walking, you can do it yourself.
But just showing you that there's a whole lot of beyond just the buying.
Yes.
You know, the agreement, the information, the details that are being captured, and you're going to say something about the closing date on the day, exchanging keys, people standing outside.
So before I touch on, I was going to even talk about the you spoke about things like fixtures and chattels, right? So I heard when we were training as agents, there was something that the facilitators told us. And I don't think everyone needs to go to this extent, but it's nice to have. I feel like it's good practice. Take pictures of the washers and the dryers.
So that it's not swapped.
And the stove, people swap those things. You'll be surprised.
I know.
People swap those things. So you might be, because the person is thinking they get like a Maytag stove.
Yeah, brands,
nice
yes.
Maytag stove or a Maytag washer and dryer. But because it's stainless steel, you don't really pay attention.
But I think in the offer, it's always, even to the detail, for a good realtor, they will write
the brand and the
model number, just to be sure
I'm saying sometimes we can't do that. So I mean, just put, at least just, I mean, stainless steel is the bare minimum that your agent needs to put in the agreement. So you don't want to go there because some people don't like anything other than stainless steel.
Yeah.
It's like just the white appliances. Well, other people like white appliances. There's nothing wrong with that. But if you have that preference, just pay attention. Just take a picture of that or you can look at the staging pictures as well, just to go back and see.
I've seen
situations where people actually switch those things.
You know what? I'm actually looking at our time, and I don't want us to stop because like a lot of things are actually coming to mind. You know, coming to mind. And I'm like, we decided to like make this very, very short, just like a short conversation, but it's kind of like it's getting very interesting. So please stay to the end. Okay, we still have more information for you. Anyway, so we're going to talk about something came to my mind. You know that again, it's a lot of emotion, right? I'm laughing because it's giving me a nostalgic feeling.
Okay. That's fair.
So it's a lot of emotion because when you went for your showing, you saw how it's staging. The chairs, the everything made the kind of house look very beautiful.
Right.
Now you're closing. You're going to an empty house.
Buyer's remorse.
It is empty, right?
Yeah.
And then you're not seeing those pictures anymore. You're like,
I start seeing things. This house is small.
Guess what? I'm telling you, it did happen to me. It happened to us, right? So when we went to the living room, and I was like, but this living room looks bigger than when we came for showing, right? And I went to the backyard.
Yeah.
And I'm like, but this backyard looks longer. You know, so what's going on?
You know, if you think about it, you're buying an asset for 500, 600, 700, 800,000, 1.5 million, 2 million that you saw for just
few minutes.
A total of, let's even assume
30 minutes.
If you stayed long in the property, 2 hours.
You must be sleeping there.
Do you get? Because the showings are 15-minute blocks or 30-minute blocks or 1-hour blocks. Yeah. So you see all that and you spend so much on an asset that you only saw. So it's only normal that things will be different because you didn't live in the property for like a week. Just say, let me just test this property for like a week to see what is. Just like a few minutes or a few hours. So yeah.
Do you know that a few times behind my back of my back, I went to the house. I drove around just to be sure. I think I took like 2 days. It was a lot of emotion and excitement. But I kind of figured out like the first day we came, the way I was excited about the environment was kind of very different. By the second time, by the third time. Right, which is why I think I agree with you. You have very, very short time to see what you want to see. And there were things we noted that, if probably we had spent more time, we would have noticed and would have probably called them out or probably made them as a condition to probably reduce.
And again, sometimes, sellers hide some things.
Yeah.
Which is, and again, if you're representing a seller, we don't encourage our sellers hide stuff, but let's say there's like a small hole in the wall or something. Maybe it might not have done it intentionally. Maybe a couch was just positioned there when you came the first time, and then now the couch is out, and you now see the hole, and like, where's this coming from? So yeah, that happens sometimes, right?
So what happened? That kind of case, who fixed it?
You could ask,
but a very little things, right? Just
you could ask. If you see like the hole the size of a fist on the wall, you might. And when you came there, you didn't see that there before. Then you let your lawyer know that this is what I'm saying. Take a picture of that, send it to your lawyer to send to their lawyer to let them know that please, if they can get this fixed before closing, that would be ideal.
Yeah.
Otherwise, your lawyer, you could fight on this and ask your lawyer to claw back a certain amount from the closing fees that the seller is due to, entitled to. Usually, they get it fixed.
Don't worry.
Everybody wants their money.
We're both, we've gone through this journey, right? So we got you, right? Either from a realtor perspective or also from a buyer perspective at some point. So we understand, what to look out for. And then it just keeps you, in a very safe hands. Okay.
Yeah. There was something I thought of as well about, and I think people don't really touch on this as much. Looking out for asking questions about rental items in the property. So rental items could be like the hot water tank that we spoke about. For instance, sometimes aside from your mortgage, because people are surprised, some buyers are surprised sometimes, especially because, like I said, agents, we just think, everybody should know this, but that's not always the case. So aside from your mortgage, aside from your property tax, and aside from your condo fees, if you do pay condo fees, but if you're a freehold property, there's something there might be the need to pay hot water tank rentals. $50, $60, $80, doesn't matter, right? There's that amount as well. Then sometimes sellers get these things in their house, like water filtration systems, reverse osmosis and things like that. So those things could have fees attached.
And even PTOT, parcel of tied land,
which is sort of like having like a condo fee as well. So
and even cameras, people, security features,
alarm systems as well.
Rental. Some people do rent them. Yeah.
So it's good to for your agent to ask those questions. Is this a rent? Like, what is it? Usually, there's a line item in the contract
that'll be listed rental
items, right? So it's good to know what is the rental, so you can kind of like plan your finances around knowing what you need to pay for.
So there's no shock.
Yeah.
No surprises.
Aside from your property taxes and everything.
Because the same way you're so excited, when you move into the house and you start finding out those things, you could just get tired, like, what's going on here, right? So it's very important, that those information are captured. Right?
And if you really like the house, like you've seen this before, if you really like the house, you can ask basically, you can ask the seller if they are willing to pay off those things, item. Right, you don't have to inherit the fees. You can ask them to pay it off, but that's if they are willing to do that, right? But if they have a buyer that is willing to take on those things, don't be surprised if they decline, right?
Yeah.
Because they have someone that is ready to take on those things. So
yeah. I think pretty much even furnace, right? Sometimes it's not paid off. It's probably rented. They're still, probably financed rather,
right?
And they're still paying off on it, and then you might have to put the condition to them to pay it off.
Yes.
Or if they agree, then you have to work it out. What works for you? If you think the numbers make sense, right? Yeah. And then you can
take
work
on
it
that
out.
or not.
Yeah. There's quite a lot of information, right? It's just beyond. The summary is the summary is there's more beyond just going for an inspection of what you can see, making an offer. There's a whole lot of conditions that goes into buying a house.
Buying a house as well. Yeah, absolutely.
Yeah.
And so back.
And if anything comes to your mind, right, you want to tell them that. If anything, if you just drop it in their comments. If they probably
leave a comment as well.
If you remember, if you remember anything that probably you guys missed on these, or you want to ask about these, just put it in the comment
section. Yeah,
I will definitely respond to you
to that. Yeah. So closing comes, and all things being equal, everything works out for good. And like I said, the beauty of our job is people, see the fruits of their labor.
Absolutely.
Fruits of their labor. Because all those long hours, the overtime you're working, the money you saved up. Because remember, that was an opportunity cost. That money that you saved up, you could have gone to Mexico or Cancun with that money, but you decided to buy property.
But that's an investment now. That one, you're going to go, you have to be clear.
It's an investment in your mental health. So,
once you're back, that's a matter of fact, from the day the vacation is due.
No, from the plane, as you're coming back to the cold weather, you're like, oh my gosh.
He's gone.
But hey, it's an investment in your mental health. Yeah,
absolutely.
So I'm saying you could have done that with the money, but use it to buy this particular asset, right?
Don't mind him. He bought his own property. So you have to get your own.
Get yours
Don't go and blow that money up. Let's get that money to get you something, okay? Yeah. But again, you have to live life, right? Like we said, one thing we do is we don't change any part of your life. The now, the future.
Everything is important.
Everything is important. Yeah. Your vacation, the time you spend with family, McDonald's, your Tim Hortons, everything is important, right? But again, we just want to make sure that it's an experience that is what it's for you, and nothing is suffering. You're enjoying life to the fullest, and that's what we do here.
I think remember, I always laugh when I think of those financial gurus that talk about you cutting on Starbucks every day to buy. Yeah, it's always funny. As if like a $9 Starbucks cup will change your financial future,
right?
Yeah, but I get the concept behind being more reserved without spending and things like that. So yeah, you get your keys and the house is yours, and then you can decide to your key things you need to start thinking about now. After, if you might be moving yourself or you have a moving company, but at least start transitioning the utility bills into your own name, gas, hydro, water, condo fees if it's a condominium, also your internet, because we can't do without internet these days, right?
I mean, that's even like
have that
the most important, because they need to know, because I'm not sure people can do without internet in a day or two in the house, but like if you work from home, kind of a thing,
So have your internet scheduled already. Have a cleaning company. You can do that yourself as well. Some people get pest control done.
Depending on the environment.
Especially if you're like in a condominium townhouse. Usually, even if your seller was a clean person, because they live around other people, there's a chance that some people were not taking their properties as well as they should have. So get pest control in as well.
Yeah. Anything else?
That's what I can think of for now.
So
anything else on you?
So we've closed. We've closed on the house.
It closed.
That's it. Yeah. Get the key. We're moving
now
in right
for
now.
The house party. Invite us for the barbecue as well. Want to be a part of your family and watch your family grow in that new beautiful property. So finally, you've closed.
And that was the journey, right, of how we closed on our first property in Canada. And I think for you as well.
Yes,
right? It was a similar journey, right? We'd like to hear your own story. Probably you've been a homeowner. Probably you bought your first house. We just want to chat in there. Just type.
Put it in there as well.
It's a similar experience. Mine was different.
If you have some horror stories,
you might want
to hear that as well, because other people might learn from your own experience as well. So we'd like to learn from that as well.
All right, great. Okay, so, that's it. Thank you so much for sticking to us till the end.
Absolutely.
We hope to be part of your journey.
Yes,
and we hope to part of your story. So stay tuned. It's still on your YRJ Pod with Nasser
and Joe.
Thank you so much. Have a wonderful day.
Take care, guys.
Bye.